And we've got a lot of big corporate commentary today. After seeing a muted growth for the last few years, consumer goods company Procter & Gamble seems to have turned the corner in India. Speaking to CNBC-TV18's Priya Sheth for the first time after taking over, the P&G India Chief Madhusudan Gopalan responds to rumours of delisting and simplification of the organisation structure. Says that India has become a positive growth engine for the global parent. Listen in.
So far for the year, our growth rate on top line is very bullish. We are growing at 15% plus growth in terms of top line growth. Equally importantly, we're very pleased with the progress on the bottom line as well. One of the things we're very focused on is balanced top line, bottom line and cash result. And so far the strategies that we've put in place have been delivering that balance between top line and bottom line. And we're pretty optimistic that as long as we continue to delight consumers with the strategies we're working on, the results will follow.
But ever since you've taken over, we've seen some sort of aggression that's playing out in the market. We've seen 20% kind of growth, high double-digit growth coming in for P&G in India. Is this kind of growth sustainable in this complex market like the Indian one?
Yeah. I think the drivers of growth as we look at it, first and foremost is driving the total category growth, right? And to drive the total category growth, we have to look at ways in which we can offer solutions to consumers that they're not getting today. And that solution will happen only if we offer them superior product at superior value and make those solutions available to them.
When you look at the overall Indian market, the contribution to global revenues is only about 2%. And I know that you've been working hard to increase the kind of share to the overall revenue. So is a 5% kind of figure possible over the next 5 to 7 years? Is that a reasonable estimate?
Very transparently, that's not a number that we are focused on, right? The number that we are focused on and what our global management is focused on also is how can we ensure that we disproportionately grow our India business on top line, bottom line and cash. And as long as we do that, and we can do that only by delivering our strategies of superiority, productivity and organization agility, I think we will be very happy with the result. What that means in terms of contribution to the global business, frankly, is an outcome. But I'm very happy to share that in the last 2 quarters, we've been a strong positive growth engine for the global parent, which has been recognized, and we intend to continue to do so in the coming quarters and years as well.
Also, talking about your operating structure in India, you have 2 listed entities and 1 unlisted entities. Is there some sort of progress in terms of simplifying the structure? Would you perhaps look at listing your 3rd entity as well?
Yeah. Frankly, our bigger focus at this stage, and that's what David, our CEO, has talked about as well. Our bigger focus is in terms of simplifying our organization structure so that we empower our organization to be able to move faster, get more accountability to the organization, continuing to play on the category axis that we've decided globally. That is an area that's been a key focus for us in India.
A couple of years ago, there was some talk about P&G looking at delisting the India business. Is that something that is still something that has been considered? Are there certain talks around this?
I don't want to comment on that specific question, but what I want to reiterate is our primary focus is on how do we make life simpler for our organization so that they can stay focused on consumers and customers. One
key concern that the street has had with P&G is the distribution. And I do understand that you've taken this on very seriously. You've sort of doubled distribution over the last couple of years, and we've seen significant improvement in this year as well. Run us through how is distribution shaping up? What is the kind of reach in the tier 2, tier 3 cities as well as we speak?
Half the world's stores are in India, right? So distribution continues to be very critical. So, we continue to put enormous focus in terms of making our products available across the length and breadth. Many of our brands are available in several million stores as we speak. And our focus is cutting across what we call as the urban India. And this is a new terminology we've coined, where we're looking at the top end of rural and the lower end of urban, which we call as urban. And what we are seeing is there's a lot of growth potential we are seeing.
So what's the rural-urban split at this point in time in terms of distribution?
If you look at some of our brands, close to 40% of our business actually comes from rural today. right? And if you look at distribution, brands like Head & Shoulder, for example, is available in more than 5 million stores today, right? So this continues to be a focus. But having said that, we're very pleased with the focus we have a lot of opportunity.
Okay, that's P&G betting big on the India story. We'll take a short break on that note. You can hear excerpts of that interview through the course of the day and on our website as well. Up next, Vinod Sharma of HDFC Securities will join in with the top F&O trades. Also, SP Tulsian of sptulsian.com will be with us to give us some long-term stock bets.